Hey, 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 everybody. It's your boy, Sean McLaughlin at Options Sean on Twitter X. Today is Thursday, November 14, 2024. Hope you're doing well. The holiday season is rounding the corner. We're almost there. And my camera just froze, which is great. So we're getting that out of the way. Let's just get right to the disclaimer there, Gene, and let's tell everybody that hey, everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope you learn something along the way. My camera's back. All right, so that's good. Hey, if you're a first timer here, this is the options jam session. What we do is we kind of give a little high level overview of what the market looks like, what the volatility picture is. Then we dive into some action in the portfolio, any moves we've made, whether we've adjusted positions or exited any for a profit or a loss. We review that. We update some stops on some positions that we have currently on the books, and then we'll briefly touch upon any new positions we've put on in the last week. So let's start with the S&P 500. We've had a big, powerful rally coming out of the election. Um, we've gone sideways more or less for all of this week, really. It feels to me like a healthy digestion following this explosive move off of the 50-day moving average here in the S&P. Feels like healthy digestion to me. Let's pull up the cues to see. It basically tells the same story. Big blast off and then sideways for 5 days. So it remains to be seen what the next move is in the markets, but feels to me like the next move is higher, right? This healthy digestion, the dips are being bought. Um, the next move certainly feels higher. Let's bring up the VIX real quick. The VIX tells a similar story. Here it is. I mean, look at this. Post-election, big drop off in volatility. We're continuing to make new lows. We got a 13 handle on VIX right now. I can zoom in a little bit. You got a 13 handle there. Um, Seems like there's no bottom in sight for VIX. I'm sure there is a bottom shortly. I would be surprised if we'd break below, uh, 11. That would be surprising. But anyway, the point is, investors are feeling pretty good. Now, you can make the argument that they're feeling good about the incoming administration, or you could maybe make the argument that they're just glad that all the uncertainties out of the way. Either way, the market likes what's happening, and that's being reflected in the indices, in the performance of a lot of stocks, and in the volatility picture. All right, so let's talk about some action amongst our open positions in no particular order. Let's start with run. This was one of those trades that this was going into the election. It was a bet, not a bet, but a hedge against a narrative shift. And what do I mean by a narrative shift? We've talked about this a little bit. A narrative shift basically meaning um, if the unexpected happened, right? The market seemed to be pricing in a Trump victory, which the market got right. But, sometimes weird things happen in elections. I mean, all you have to do is look back at the November 2016 election when Trump first got elected. No one expected that. And the market reacted accordingly. And so we were prepared just in case there was a narrative shift. The unexpected happened. And we thought that this sector, clean energy, solar, would potentially react positively if Kamala Harris won. She did not. And we are seeing the results of that. But hey, we bought the March 16 calls for 260. We got out when we saw broke below our risk management level. We got out at 61 cents. So not a total loss, but a loss nonetheless. Let's talk about, so that's the bad news. Let's just rip the Band-Aid off. Let's get the bad news out of the way. The rest of these updated positions here are all good news, relatively good news. Let's talk with CCJ. So CCJ, maybe you can't put it in the good news category just yet, but we've done some positive things to this position, which I like, which was all laid out in the detailed trade plan that we put out when we published the post. We got into this trade on October 16th. We bought the January 80 calls, the January 2026, so more than a year to expiration. We bought the 80 calls for $5. That's the position I want to have on the books, right? But I want to finance that position. I want to lower my cost basis using short dated options to sell against my position, to lower my risk, my net risk in the trade. And so far, we've done three of those types of trades. So obviously, on the day we got in on the 16th, we sold the December 65 calls against this position for $1.50. So right away, we knocked out $1.50 of the $5 debit that we paid for the January 26 80 calls. On November 4th, right here, as CCJ was rolling over, we rolled our short December 65 calls to the next month, to January, for a 36-cent credit. All right. That lowered our cost basis again. Well, not even a week or exactly a week later, the premium kept coming out of those calls. And by the way, I'm rolling these calls when their premium gets to be roughly around 50 cents or less. At that point, I'm like, okay, let's roll it forward and try to get more credit. On the 11th, the January 65 calls, they were quoted below 50 cents on the offer. So I'm like, all right, time to roll those. And we did it again. So we rolled to March 65 and we brought in a 95-cent credit that time. So we paid $5 on the day we got in. We've already brought in, my quick and dirty math here is about what, 330 in credit? Is that right? 150, 250. Yeah, but let's call it let's call it 325. We brought in 325 in net credit already. So our total exposure in this trade right now is $1.75. That's the most we can lose if CCJ does not follow through on the upside. We got a lot of time for this to trade out. What I'm hoping will happen is that this position will kind of chop around in this area, maybe even go up to about 60, 65. We'll get a couple more rolls in, bring in some more credit in such a way that now we are sitting in a net positive situation in our calls. And then I won't need to roll anymore because now I can't lose, right? So if I get maybe 2 or 3 more credits, right, and all these net credits total up to more than $5, then I'm hoping that that last roll that I do, those calls will expire worthless. And then I'm just left with the January 2026 calls at a net credit, so I can't lose, and I got a free ride for the remainder of the year. That's the ideal situation, and that's what we're hoping for. But so far, these are the adjustments we've made to our CCJ position. So far, the chart isn't really going where we want it to go, but I like what's happening with the additional credits coming in. It's working in our favor, so I'm optimistic there. Now, some really good news. TOST, ticker TOST. That's TOST Inc. Back here on October 8th, we bought a March 30-40 bull call spread. So that means we were long the March 30 calls and short the 40 calls. We paid $250 for it. And our plan was if the stock traded up to our short strike, which was the 40 strike, if it traded to and through the 40 level, because our profits are capped, the most this spread could be worth is $10, right? That's the distance between the strikes. We're long the 30s, short the 40s. The most that spread can be worth is $10. So that means our profits are capped. Once we get above $40, we can't win that much more. We can. Theta works in your favor at that point. But now we're risking more, that we're risking the current value of the spread to make fewer and fewer extra dollars. I don't like that risk reward situation. So when bull call spreads go in the money, generally speaking, that's when I like to take my profits. So we paid $250 for it. We got out yesterday at $660. So not quite 3x our money, but a very good return nonetheless. We didn't take really any heat in this trade. We got in, like I said, on the 9th, I believe. We didn't really take any heat. We had a couple down days. I'm sure we were down, maybe 25, 50 cents at most. But man, this trade really worked for us. And then following earnings, I don't know if this was an earnings or election reaction. Either way, it doesn't matter. Price went our way. We are out of TOST. Okay, lastly, I talked about this on the morning show this morning. So if you guys saw that, I'm going to be reiterating myself here. I won't go into the full deal, but there is something. There was one piece that I did not mention when I was talking about this morning, so I want to make sure I get it clear. So back on September 24th, I believe, is when we got into this trade. We got into a diagonal spread. A diagonal spread is similar to a call calendar spread, except that the strikes are different, right? So I sold the November 53 calls, and I used those proceeds to help me reduce the cost of the March 55 calls that I wanted to be long. That's the real position I want, the March 55 calls. I sold some November 53s against it because I wasn't so sure that ARK was going to rip higher the way it has, right? And for the first, 3, 4 weeks we were in this trade, it seemed like the right move as ARK was not really making any headway, it was not stopping us out, but it was not making any headway. And I was feeling pretty good about those short November 53 calls, just expiring worthless and helping me reduce my net cost of those March 55 calls. But, and we had a plan for this. It was in the blog post when we published it, but we had to make adjustments if ARK did rip in our favor. And sure enough, it did. So when ARK got to 54, we needed to roll our short calls to the 54 strike. We did that. We rolled it up to the 54 strike and out a month to December, got a 92-cent credit for doing that trade. The very next day, it continued ripping. So we rolled it again. This time we rolled those December 54 calls up to March 57. Why March 57? For 2 reasons. We went to 57 because that was the at the money strike at the time that I made the roll. And I didn't do January. That was my other option that I could have, expiration I could have done. I didn't do the January 57s because if I did the January 57s, I wasn't getting enough credit for those calls to pay for closing the December 54 calls. So the roll would have been done for a debit. And there's nothing wrong with that. But I wanted to just keep bringing credits in. So I went an extra couple months further out to the March 57 calls and got a 55-cent credit. And so these 2 credits, the 55 and the 92, add up to 147, which is more than what we've paid to get into this trade. So we right now have brought in $1.47. We paid $1.25 to get in. So that leaves 22 cents left over. Right now we have 22 cents of guaranteed profit. ARK could go to 0 tomorrow. We're still walking away with a profit. Not the profit we wanted, all right, but a profit nonetheless. And that gives us a position of strength. So here's the thing I did not mention on the morning show this morning that I wanted to mention and I just forgot, was that when we got to when we got to the point where we were rolling the December calls to the March 57 calls, we could have done one of 2 things here. We could have just completely closed the spread and booked a profit. All right. We could have booked a profit. I don't remember the exact prices at the time, but I think I could have got $2. All right. I think I could have got $2. And if I got $2, that would have netted against, at that point, we paid $1.25 to get in, and we only had the 92-cent credit at that point. So our net cost in this trade was, what, 33 cents at that point. So I could have sold the whole spread for $2, walked away a winner. I would have netted about, I don't know, $1.50-ish. Actually, it might not have been $2 I could have got for the spread. It might have been a little less. I could have done that. I could have walked away, take the profit, moved on, washed my hands of it. I chose to keep the dream alive and keep the trade going because creating this vertical spread now, the distance between the strikes of the long strike, which is the March 55 calls. Again, these are the calls I always wanted to be the owner of. I'm long the March 55 calls now, and I'm short the March 57 calls. That's a difference of $2, right? So the most that spread could be worth is $2. Well, right now I've got I got a 22-cent credit left in this trade. The spread could be worth $2. So if I sell it for $2, then that means I can make $2.22 net on this trade. Not bad. So I'm holding out for a little extra money. Perhaps I'm being greedy. I don't know. I actually have a resting order to sell this vertical spread at $1.60. Why $1.60? Did I just make that number up? Well, $1.60 would be exactly 80% of the full value of the spread. Again, the most the spread could be worth is $2. I'll be willing to sell it for $1.60. It's like the 80-20 rule, right? If I get 80% of the max value, that's good enough for me. I don't want to risk that 80% that I have to try to squeeze out that extra 20%. So I have a resting order to sell this spread for $1.60. We've got until March for this thing to play out. We're pulling back today, as you could see. A lot of stocks are pulling back today, but we got a lot of time for this to play out. We're sitting in a position of strength. Remember, we already have 22 cents net credit built into this trade. So worst case scenario, we only make 22 cents. Still not a bad return on originally a $1.25 net investment. All right. I threw a lot at you there. I hope that wasn't too confusing. If you have any questions, throw them into the chat room there in the YouTube. Happy to address it there. So that's it for all of the closed or adjusted positions since we last spoke last week. Let's review updated stops. We have a couple to go, or three to to look at. We were just talking about ARK, so let's stay here on ARK. We're moving our stop up to $50 now. We don't want to see ARK get into this gap, this post-election gap. That would be bearish for our position. So while we do have a position of strength, we can't lose in this trade. I will look if we get inside 50. That's a pretty bearish sign for me. That might tell me that the rally is exhausted. So I will close the spread for whatever I can get for it, and that will just add to my current guaranteed profits in the trade. Next stop we're updating is NSP Insperity Inc. This is a short position. We're long the January 75 puts. It's going our way. This is great. This was one of those hedge trades, right? We wanted to have some bearish exposure just in case uh, the market didn't agree with us. Well, we got the bull market still, but this stock is just a dog, and this is why we chose it. It was already in a downtrend, and why bet against that? So we are short. We're via long puts. We're along the January 75 puts we paid $2 for back on October 18th. It's going our way. I'm moving my stop down now to 85. I want Insperity to stay below 85. Any close above 85, I'm out. And next up, Grab. This one's working great for us. It's been a little bit of a wild ride. We got in on September 30th, and it did nothing but go against us for 2 weeks. But that's okay. We held in there, and we're being rewarded for it. The rally is continuing. This is turning into potentially a very good trade for us. These are January 2026 options. Again, options that don't expire for another year. So we're off to a great start here, and this has the potential to be a really big winner for us. But that said, our stop is now at $4. We don't want to see Grab get back below 4. That would be a pretty bearish development for this trade, and risk management is job one. So our stop for Grab is $4. Okay, now we got a good news, bad news situation here with the two new trades we've put on since we last spoke. Let's just get the bad news out of the way first. Here's this PSN Parsons Corp. I put this trade on, and I even sent a tweet out saying, hey, these are the kind of stocks, when it looked like this, let's get the ugly red candle off the chart. That doesn't really work. I put a tweet out saying, these are the kind of stocks we want to own in a bull market. Look at this chart. I mean, if I zoom out here, let's zoom out a little. Look at the strength of this name going back. I mean, 2 years now. Look at this rally from 43 all the way up to 115. Certainly not a straight line, but a very impressive trend that I do not want to get in the front of. Well, I mean, as you can see by this ugly red candle today, I guess there's some news out that or there's a growing feeling that the current or the incoming administration in the White House might not look too favorably upon some of these defense sector stocks. It's a national security and critical infrastructure is what Parsons is involved in. I don't know, but they're taking Parsons and many stocks like it to the woodshed today. So we got in, we got in on Friday, I believe is when we got into this trade, and it's already not working for us. Our stop level is right here at 104. And barring an afternoon miracle today, we're already going to get stopped out of this trade. If we close below 104 and stay there tomorrow's open, that'll be my signal to get out. Thankfully for us, this was a defined risk trade. And all the details for this trade and all the new trades can always be found at allstarcharts.com. Head to the members section, head to the options section, and you will find all the detailed trade plans, what we like about the setup, what option strategy we're using, how we manage risk, where we stop out, where we take profits, all those things, all those details are laid out in every blog post we publish for every trade that we publish. So Parsons, we hardly knew ye. But you know what? If we're going to lose, I like to lose quick. So we got that going for us. So check that box. On the good news front, we got into the Euro Stocks 500 ETF yesterday. And boy, did we may have timed this one perfectly. We were making the bet that the Euro Stocks 500 ETF, these are the biggest stocks in Europe. These are the tech names, the consumer discretionary names, the financial names, all the biggest companies in Europe. We were making the bet that they were going to stick this landing right here, that this little reversal candle, what do you call that, a hammer? That little hammer candle was going to hold, and then we were going to maybe not rocket higher, but certainly start trending back above or back towards highs. And right now, it's only been one day. It's not even been one day. It's been like less than 24 hours since we put this trade on. We're looking like geniuses right now. Of course, we have a long way to go. And again, the trade details can be found at allstarcharts.com. All right. I'd like to share this with you guys. For those of you who asked for it, here are the updated stops once again. If you want to take that screenshot or write them down, please do. And finally, if you have any questions at all, please shoot me an email, info@allstarcharts.com. That will get routed to me. And if you are not involved in allstarcharts.com, you can go to that link right there. I'll make it even easier for you. I'll put it in the chat. There it is. It's in the chat, on the YouTube chat. If you want to get involved in All Star Options and get all these detailed trade plans ahead of the curve, you can get involved right there. All right, everybody, that's all I got for you this week. It's a bull market, you know. Let's act accordingly. I'll talk to you next week. Take care.